Hello, listeners. We're so excited to have Garrett Sutton on the Tech Guys Who Invest today. Garrett, thanks so much for coming on the show.
My pleasure, Adam.
Well, Garrett, I want to dive right in and ask you, how would you define what asset protection means?
Well, Kevin, asset protection means that you understand the risks of investing. We live in a very litigious society. People are suing each other all the time. And asset protection is the realization that we have a litigious society. We need to take steps to protect our assets. And so with asset protection, it includes having insurance. You're always going to have insurance on the properties you invest in, but you need a second level of protection, and that would be the corporations that can protect you from being held personally responsible for a claim. If you own a duplex in your individual name and a tenant sues, hopefully your insurance covers it. But if it's a big claim, they can go past the insurance and get at the property and your personal assets. By having an LLC on title to the duplex, they can get what's inside the LLC, but they can't go beyond that and get at your personal assets, your retirement accounts, your other assets. So we need to realize that asset protection is very important, and you need to do it right at the start, because you can get sued anytime. If your name is on the title to that property, you can be sued personally. And let me tell you, spouses don't like it when you lose all your assets. So we don't want that to happen.
Definitely don't want that to happen. And Garrett, when you talk about insurance, what type of insurance is it? I'm thinking similar to like a lender's insurance or something like that. What does that look like?
Well, if you buy that duplex, you need fire insurance, general commercial liability insurance. You'll work with your insurance broker to get the right level of coverage for that property. But as we know, insurance companies have an economic incentive to not cover every claim. And so they find reasons not to cover you. And so we need that second level of protection, which is the LLCs. For real estate, primarily, we're going to use LLCs.
Garrett, with some newer investors who probably question, do I need this? I'm just starting out. Maybe I have a duplex and that's it. And one day I would like to have a big portfolio, but right now it's one or two properties. How should they be thinking about this?
Well, they need to think that anything can come out of the blue. I mean, you can get sued by a tenant at any time. And it may not be intentional. You didn't know that there was a problem at the property, but as the landlord, you're responsible for that injury. So again, we're going to have insurance, but we want to have that LLC on title to the property. It's not enough to just set up the LLC. You've actually got to transfer title from your name into the name of the LLC. And by doing that, we protect your other personal assets. If someone, let's say you're just starting out with that duplex and you say, I can't afford the couple $100. It's less than $1,000 to do all this. I can't afford that right now. But what can happen is if you get sued and it's a personal claim, they have a judgment against you. They can renew that every 7 years. I mean, you're 2 steps back. You've taken the 1 step forward to invest in the duplex, but by being sued personally, you're taking 2 steps back. You're in a worse position than when you started. Having the LLC on title allows you to move forward with protection.
Okay.
Nice.
So right now, Garrett, you've been talking a lot about landlords and people that are owning properties and duplexes, et cetera. How would this apply if you were the lender, let's say a residential note investor?
Well, if I'm the lender, I want the property in an LLC as well, because if the tenant sues, it's turmoil. As the lender, I'm going to have a personal guarantee, right? I'm not going to accept an LLC guarantee. I'm going to have a personal guarantee from the person I'm lending to. I'm going to have a first deed of trust on the property, securing my interest. And the fact that it's in an LLC doesn't change that. I still have their personal guarantee. I still have that first deed of trust, whether it's in their individual name or in the LLC. But I would argue that the lender is better protected if the property's in an LLC. It reduces the risk of the individual being sued and losing everything and not being able to pay off the lender. So as a lender, I certainly approve of having properties that I've lent on in an LLC.
Okay.
When people start a business or an LLC and it may be their first time doing so, I bet you see a lot of mistakes. What are some mistakes that you typically see from people doing this for the first time, or things that people should kind of maybe be looking out for if they're doing this early on?
That's a good question, Adam. There are a couple things. A lot of people will go online to do this, and the come on is, we'll do this for $99, and all you get are the articles of organization, the filing with the state. You're only 30% done at that point. You need to have the operating agreement, which is the roadmap on how this is going to work. You need to have the minutes of the first meeting. You need to have that membership certificate that says you own this thing. It's like a stock certificate. If the IRS comes calling and you don't have these items, that's 2 strikes against you. So you want to set it up completely. And we've tested these $99 providers, and either for $99, you get a piece of paper, and the second piece of paper is an invoice, or you get $99 articles of organization, and then they say, oh, it'll be $1,500 to finish it. So it's a bait and switch. So really, you've got to watch out for these types of promoters. We provide a package price, which includes everything that you're going to need, including the registered agent fee for the first year. So it's important to do it right at the start. People also make the mistake, we alluded to it, where they set up the LLC and they think they're done. You have to transfer title from your name into the LLC name, and that's a filing you're going to make with the county. You haven't sold the property. It's not a taxable event. You're just transferring it from you to your new LLC. So those are 2 things to know right at the start. And when you make that transfer, one little thing, don't use the quitclaim deed, use a grant deed, which your title insurance follows with that. Too many people, they think it's pronounced quick, Q-U-I-C-K, and it's quit, and it doesn't convey the same rights that a warranty deed or a grant deed does. So beware of the quitclaim deed and use a grant deed.
All right. Thank you for that. Now, I've been looking at a few notes, and over the years, I've seen quitclaim deeds a lot in a due diligence packet. After doing more research, that's the conclusion I came to as well, that if you see a quitclaim deed, it doesn't have the same as a general warranty, the same protections. Can you help break down why it doesn't for people that don't understand?
Sure. And people think that the difference is this huge difference in the wording of the deed, and there are really only 3 or 4 words that are different. So here's the thing with the quitclaim deed. The quitclaim deed says, I don't really know what I own. Whatever I own, I'm transferring to you. All right. Well, that's not really a good way to go. The warranty deed says, I warrant that I own the property on Elm Street, and if I don't, you can sue me. All right. So when you're a buyer, you want them to warrant that they actually own the property that they're transferring to you. And you don't want to accept the quitclaim deed because you don't have the ability to go back and sue them if they don't give you the title that they promised. It's a huge difference, but in the deed, it's 3 or 4 words that are different. The quitclaim deed is not any easier than a warranty deed. They're both virtually the same kind of deeds. It's just the wording is a little different.
Makes sense. That's a good explanation. I think it does start to confuse people when you get into the different types, and so that clarification is super helpful. I'd like to switch gears just a little bit, and Garrett, I know that you are an expert in helping people kind of maximize their revenue, and I was just curious, when it comes to maximizing revenue, what mistakes are investors making, especially people who are kind of just getting started, and they want to put kind of a longer term roadmap in place, but they're not quite sure some basic things they should do.
Well, I'm part of the Robert Kiyosaki's Rich Dad Advisor team, and we always advocate a team. All right. You don't have to know all the legal stuff, Adam. You don't have to know all the CPA stuff. You build a team of people, and that allows you, with the team in place, it allows you to move forward with your investing. And the legal guys can take care of the legal, the CPA can take care of your accounting. But I think one way to maximize your real estate investing is to have a good CPA on your team. I mean, they can save you a lot of money with depreciation and cost segregation, all those tax advantages you need to be able to take advantage of with the right team member. And so when you're interviewing a CPA, I mean, a question I have my clients always ask is, of the CPA is, do you invest in real estate? Right? I mean, a CPA who invests in real estate is going to know what you need for your accounting purposes. So I think in terms of maximizing revenue, there's so many advantages in the tax code for real estate investing. You really need a good CPA that will help you take advantage of them.
That's great
Awesome.
advice.
Thank you for that breakdown. Now, Garrett, I know that you mentioned earlier that you're part of Robert Kiyosaki's investment advisory team, and I was just listening to an episode from I think Rich Dad Radio, and Kiyosaki's been predicting the downturn since 2016. And I hear back and forth that something's coming, something big is coming. That being said, what would you say to people as to how they can protect themselves or shield their assets from the next economic downturn?
Well, certainly in times of economic uncertainty, litigation rises. People are more willing to go after someone because they're suffering, or they feel like they can make their way by suing people. You have a huge increase in litigation during downturns, which means anybody listening right now, if you hold your assets in your individual name, you really have to look long and hard at spending the money. It's not expensive to set up these LLCs and corporations, because if the assets are in your individual name, people can go to the county recorder's office and see how you hold title. It's public record. And so people will do that. And by having title in the name of an LLC, you are discouraging somebody from suing you. It's much easier to get at those assets when they're in your individual name. So in a downturn, time to think about having your properties in the state, in an LLC where the property is located. And then we like to have, let's say you have a Florida LLC for a Florida duplex and a Colorado LLC for a Colorado fourplex. I like to have the Florida and Colorado LLCs owned by one Wyoming LLC. Wyoming provides excellent asset protection, and it's very affordable. And so that's how we like to structure things: an LLC in the state where the property is located, a number of LLCs owned by one Wyoming LLC to protect you in the event of a car wreck. If you get in that horrific car wreck, someone wants to get at the Florida and Colorado properties, they have to fight through the Wyoming LLC. Wyoming is very protective of your assets. And so that's how we like to structure things. And in a downturn, it's a good time to start thinking about how can I, now's the time to start protecting.
Excellent. So Garrett, we share mindset with our listeners a lot. And we just love it when we have the opportunity to talk to somebody like yourself who has a lot of experience and is surrounded by what many people recognize as some of the best. And you are on a team of some of the best people in each field. And as a successful business owner with Sutton Law, it would be really cool for our listeners to hear how you use real estate as part of your investing strategy as someone who is a business owner, but I'm sure you then use real estate as part of your wealth strategy. Could you just share a little bit of that with us?
Well, it's in this book, Adam, called Loopholes of Real Estate.
Awesome.
But no, using business to buy real estate is a great strategy. I mean, the building I'm in right now is held in an LLC. My law office and corporate rep pay rent to my LLC, right? We have to pay rent to someone. It's a business expense. So Sutton Law Center will pay rent to the LLC that owns this building. It's an expense to Sutton Law Center, but it is a way for me to use expense monies to buy real estate. And so I think every business owner has that opportunity to, you're in business and you need a place to operate from. And a lot of people just say, oh, I'm just going to pay the rent. But think about the idea of buying your own building. Now you've got to use your own money. You can't use you really shouldn't use the business's money. You'd use your private money as the down payment, and you'd have a tenant. So you go to the bank and say, look, my business is going to be the tenant. So the bank likes to see that. But then over a 20-year period, your business is paying the mortgage. And at the end of the day, when it's time to retire, you own this building in your own LLC name. And you could, when you sell the business, you keep the building. It's a great way to go. And not enough people use this strategy.
Man, that's a great strategy, Garrett. And speaking of these strategies, being on the Rich Dad advisory group, I'm sure you've come across people of various net worths, various wealth profiles. That being said, how do rich people think about assets in a way that's different than the middle class family does?
Well, I think the rich people, and certainly I've seen this in my travels. I've traveled around the world with Robert Kiyosaki, not only the US, but Chile, Australia, all over the world. And the rich people realize that there is good debt and bad debt, right? You can use good debt to buy assets, all right? Bad debt, Robert calls them doodads, is using debt to buy a snowmobile, right? That's not going to put money in your pocket 10 years from now. So you've got to use the good debt to increase your assets and just stay away from the bad debt that doesn't do anything to improve your financial situation. And, Kevin, from what I've seen, that's what rich people understand is good debt versus bad debt.
Yeah, that's excellent. And Kevin and I host a Tampa cash flow game where, we'll get people together and just try to teach them basic finance concepts by playing the cash flow game.
Good for you. I think that's terrific.
Yeah. And what you just mentioned is a lesson that so many people come away with right there. They're like, wow, okay, I'm starting to see this now after they draw a doodad card and
right.
buy something they don't need. That's excellent. What about like behaviors or habits or patterns that wealthy people have that middle class may not?
Well, that's a good question. I'm trying to teach my kids this. I think, the rich people try and teach their kids this. Some don't. I grew up in a family where you never talked about money, right? That was just something that was taboo. But right. I think that's changing. I think parents realize that their kids need to understand this stuff. And I think there's this great understanding across our country that at some point we've got to start teaching our kids about financial education. It's insane to me that we don't teach kids about a mortgage or about, your credit score. I took algebra. When was the last time you used algebra in everyday life? I don't even know what a quadratic equation is anymore. I've never used one. So why not teach financial education, which would have some practical benefit to the kids and might even keep them interested in school a little bit longer? So I think education is a really big thing. And it seems like, from what I can tell, the rich are teaching their kids this. And one of the problems with the middle class is, the parents, God bless them, are, living paycheck to paycheck. And they don't really want to talk to their kids about money because they're having money problems. And so I think that, if you're in that situation, talk to your kids about it. I mean, they'll understand. But I just think that, if you're going to have that next generation succeed, you need to talk to them about money.
Oh yeah, that
Yeah,
is
I love it.
huge. Great advice. And speaking of the information you're sharing with your kids, what advice would you give young people who aspire to be wealthy?
Well, I would start reading the Rich Dad Advisor books, Robert Kiyosaki's books. There are plenty of great books out there. And again, you're not going to get it in school, right? So you have to get this information on your own. And, Adam and Kevin, you're providing this information too. I think it's great. And so people need to watch shows like yours to gain this information and hopefully pass it along to the next generation.
So, Garrett, I think it'd be pretty interesting to people to hear what you personally like to either, listen to in terms of a podcast or maybe there's a blog or some sort of a knowledge resource that you use. Because we talk a lot about, well, if you're new and you're just getting started, what are some things that you could check out? And that's valuable, but there's nothing like hearing what some of the pros listen to, just to know what that is. Would you mind sharing that with us?
I listen to Rich Dad Radio. I love Robert's take on things, and he's pretty fearless at times.
Yeah.
And the Rich Dad Advisor books, I seem to edit all of them, so I'm reading all the Rich Dad Advisor books, and those are the main ones. And a lot of my time is spent writing books, so I don't have, that much time to draw on other information. I probably should, but certainly Rich Dad Radio is a great spot for getting information.
Excellent.
Yeah, I agree with that 100%. Now, Garrett, just a question for you. What would you say is harder, writing books or asset protection and investing in real estate?
It's really funny, Kevin, when Robert said, we want you to write a book, I was so jazzed and I got it done in record time. And, 10 books later, it's a little harder. It doesn't come as quickly as it did that first time. But, I think I do both the writing and then I get on the phone with people. I'm talking to people every day. I mean, you can set up a consult with me. I get on the phone with you. And I really enjoy talking to people around the country about what they're doing and what markets are good. And, then we set up our structure with the state holding LLCs and the Wyoming LLCs. And so it's enjoyable talking to people about this and helping them out because, again, this is not something anyone ever picked up in school. So you have to find a way to get the information on your own.
Yeah, absolutely. Any books that you're working on right now that you might be able to share with us, or is that top secret info?
I just came out with this one, Scam Proof Your Assets, which is about all the criminality, the cyber criminality and the frauds and the swindles over the phone and the internet. And so I just finished that one. And my next one is on piercing the corporate veil. If you don't follow the corporate formalities, if you don't pay the state, if you don't have a registered agent, someone can come along and pierce through the corporate veil of protection and get at your personal assets. So that's a big deal. And people pierce the veil in 50% of all cases, which means not enough people are taking the time to protect themselves with minutes and following the corporate formalities. So that's my next book, Adam, and it should be out next fall.
Great. Looking forward to it.
Love it. Well, Garrett, we wouldn't be the tech guys who invest if we didn't ask you a tech-related question. So we want to ask you, what would you say is your favorite piece of tech that you use in your daily life?
I would say I'm a tech dinosaur. So, I learn a lot from my kids. I don't know how they pick it up, but I would have to say, Kevin, that I just use an iPhone. I mean, it does everything. So I don't have any unique tech suggestions for anyone. I'm open to them. If I'm open to what you guys suggest, because I just am stuck on the iPhone. Probably not a good thing either.
Sure. Fair enough. To spin that tech question around, what would you say is a piece of technology that could make asset protection or real estate investing easier for the average person?
It would have to be me. No. No, I don't know of a tech thing that would help you protect your assets. I don't know of an AI app that would help you protect your assets. In fact, I'm kind of leery of computers doing that kind of thing for you anyway. But reading the books, talking with friends, attorneys that you feel comfortable with, that you respect, you with a team. I mean, that's the whole thing here, Kevin, is getting that team together that can help you, that can, you need them on the bench. You don't want to pay them every month, right? You just want them there on the bench to come into the game when you need them. And to have that bench ready when you need it, I think is important. And so if you're investing in your first property, I think it makes sense to have an attorney that you've contacted in the event of a tenant dispute. That attorney should be in your city, right? Because they have to go to court. It helps if they know the judges. And so a local attorney that does real estate matters, tenant evictions and all that, that's a good team member to have. And you're not going to find a technical app that will do that. You need someone that can go into court for you, wear a tie because the judges want you to wear a tie. There's no tech app that can replace that.
Yeah, that's great. And I remember, especially when I first got started, but even still, having those members on my team gave me confidence, and it allowed me to not get slowed down by fear or worrying what would happen if.
That's a really good point, Adam. I mean, that confidence of being able to move forward, knowing that if something happens, you've got the telephone number of the guy you need to call.
Yeah.
So, I've had clients where, they got notice from a tenant, they didn't know what to do, they were frozen, that it set them back for a month. I mean, having that attorney on the bench is just really, it's peace of mind.
Absolutely. Well, Garrett, thanks so much for coming on the show. I mean, we're really excited that you came on, and having you on has just been fantastic. You've added a ton of value. Can you tell us where people can find you?
Sure. If we offer a free 15-minute consultation with an incorporating specialist, so you can call 800-600-1760, 800-600-1760. Our website, corporatedirect.com, has all sorts of articles and information, and it talks about the services we offer. So you can go to corporatedirect.com, and if you mention Rich Dad, we have a $100 off program. So you can save $100 per entity by just mentioning Rich Dad. But, give us a call, set up a time to talk to an incorporating specialist, and just see if there's a fit, see if you feel comfortable with what we offer. And we'd be happy to talk to you.
Great. Thanks so much. And we'll put all of that in the show notes, and we'll put your books that you reference in the show notes as well. So thanks again for coming on, Garrett. This has been great.
It's been my pleasure. Thanks, guys.